after the negative cues that we got from the US markets. Most of them are in the red, Nikkei being the biggest loser.
There could be one more hike in the April policy.
The SDFC Bank, robust deposit momentum continues. YOY, it's the best in last 11 quarters.
On windfall taxes, so to say, on crude oil production, they have been cut to nil versus
the pricing relief that is expected from the Kirit Parikh recommendations will come through sooner rather than later.
So the sensex is up 65 points, the nifty is up 16 points.
The valuations are now somewhere in the vicinity of 17.5 to 18 times.
Still, there are a lot of uncertainties around inflation outlook as well as what happens to the Fed policy.
It's most likely that, the new gas pricing guidelines will be considered.
Things are on the mend as far as overall sentiment is concerned. We're up about 90 points.
Indian equities have received 3 positive updates coming in from brokerages. Nifty is at the day's high as we speak, up 137 points right now at 17,535. Well, that was the day so far. Hello and welcome to Closing Bell. You're watching us live from the CNBC-TV18 Motilal Oswal studio right here in Mumbai. I'm Sonia. With me are Mangalam and Nigel. It's just one of those days that came out of the blue, and look at the way the market has soared today. I think, the market is now, above the 200-day moving average as well. The bulls have tightened their grip on the market, and it comes at a time when I guess was very opportunistic, the time when a lot of brokerages are also sort of raising their India call. But the good part is that the market has not given up on any of its gains. It's built on to the gains through the course of the day. The advanced decline ratio is solid. The cash market volumes are high. In fact, over 44,000 crores of cash market volumes. And not once in the day have we seen any kind of profit taking. So I guess that's something that the bulls will take with both hands. Having said all of that, there are so many cues and triggers to watch out for, starting with the RBI policy tomorrow and then the earnings, etc. So one never knows. The market is still in a range, but thankfully today has been a good day for the bulls.
Well, that's right. After the RBI policy, we have a good long weekend as well. That's the best news, I think so. But for the time being, we're going to have a very, very crucial final 60 minutes. And I say this because Nifty's got into that resistance zone. 17,500 around 17,550. Now we're at the upper end out there, and it looks like the bulls, they have a plan to break above that. If we can close above that 17,550, it'll be good news. And I say that because we conquered the 200 DMA in the first hour itself, but now we're built on and we're trading above the 50 DMA as well. And the options data is quite encouraging because there are signs of writing at around the 17,500 put, the 17,400 put as well. Open interest built up is massive out there. So the bulls feel that maybe that base for the market, at least in the near term, has moved up to say around 17,300 odd. The Nifty Bank, that's doing a relative underperformance today, but it's holding on to the 50 DMA. So you like what you see out there. We're closer to around 41,000 odd. HDFC Twins, well, they are doing quite well, and that's what's holding one end up. Otherwise, the Nifty Bank is doing a relative underperformance today. And Mangalam, before I toss it back to you, I just want to pull up LTTS, that's L&T Technology Services. We should get the futures plate up for you, as well as the cash market stock for you. You can get both of them up. In the futures, the stock is up closer on 7, in the cash market, it's up closer on 7%. In the futures, it's up closer on 3%. So there's a big difference out there. As it is, there was a bit of a discount that, the futures stock was trading at. And now that's got widened a little bit. So I'm not sure what's going on, whether there's cash market buying. The shorts are still sitting in the futures as well, but there's a big, big difference out there. That's the cash market rate, and in just a bit we'll get the futures rate as well. It just happened, so that's why I thought we'll point that out. Pull up the futures stock, you'll get the price out there, closer to around 3,400 odd.
All right, Nigel, I'm just looking at a bunch of stocks out here, and it's the mid-cap index. While at an index level, we are seeing some bit of an underperformance. The index is mildly in the red. It will be an important, crucial hour for the next, move on the mid-cap index as well. Why is that? Because it's Wednesday, and Wednesdays we have the mid-cap index expiry too. So is it underperformance because of expiry management or not is the big question we'll get an answer to. Mainly because beneath the index, we have more stocks advancing than declining by a wide margin. All through today's trading session, 3.5 to 4 stocks have been in the green for every one in the red. And we've been talking about how the Nifty Bank has underperformed, but despite that, there has been no problem for the Nifty whatsoever. Why? Because of the smoothest transitions that we got from the Nifty Bank to Nifty IT. The IT index is supporting the index, the frontline index that is. If you just take a look at the way the IT index has moved in the second half of trade, right at the time when we saw, the Nifty Bank underperform, the IT index at the high point with a gain of almost 1.2%. You're looking at LTTS. I'm looking at the top 6 gainers on the F&O space. All of them belong to the IT pack, and these are the top 6 gainers in the last hour itself. So be it LTTS, we have LTI Mindtree, or any of those mid-cap IT stocks, Persistent Systems for that matter, all of them doing extremely well. So the broader market's looking extremely good. The frontline index looking very good, and we have a long weekend at the end of this week. So we don't know what's bad.
That's the icing on the cake, right? The cherry on top. Okay, so lots lined up in the next 1 hour as well. So let's get straight to that. CNBC-TV18 learns that a cabinet meeting later this week is likely to discuss the recommendations of the Kirit Parikh Committee on gas sector reforms. We'll get you details from that and also analyze the stock impact. Power Dynamics is under pressure as FY23 revenues see a 13% year-on-year decline. Details coming up on the show. Banking stocks like Federal Bank and RBL Bank also under pressure post their Q4 business updates. Details coming up. And we'll discuss some top portfolio bets with Shibani Sarkar Korean of Kotak Mahindra AMC. All of this coming up in a bit. But first up, Mitesh Thakkar joins in now with some closing strategies for the hour. Mitesh, this is looking pretty good. I mean, the market has not given up on any of its gains. You think this is just a pullback rally extending itself, or do you see this as start of some sort of an up move in the market? And if yes, what are the levels to watch now?
Good afternoon. I think this could be start of an up move, I think purely because of the fact that, last 2-3 days we have said that this pullback rally looks very strong, because always a new trend will start as a pullback rally initially. And we had looked at, targets beyond 17,500, which was the 200 average, to as high as about 17,750. Now, a 750, 800 point kind of rally would definitely then, mold itself as a new up move, which could develop from these levels. So that possibility is there, and definitely we are considering that. But having captured the 200 average, there is weekly average at about 17,600 2025 levels, and then 17,750 are the two levels. So in the short term, we'll still continue to believe that this is a pullback rally. But once we start getting past 17,750, then I think they should see further legs to about 18,100 plus levels. So stay positive. I think the structure on an immediate basis is very, very strong. The indicators are still rising. The averages on the intraday charts are still rising, and they're expanding. And the volatility indicators also in the hourly and the 2 hourly charts are very positive. So stay long very clearly. I heard Mangalam talk about IT names. In fact, I did identify LTIM as one of the stock calls on the long side. It's given a good breakout with volume as well. So buy here with the stop below 47.70 for targets of 49.50. And last week we had multiple buy calls on Ultratech Cement. Today, Shree Cement is something which is just getting into a verge of an uptrend. So that's a fresh buy call. Keep a stop below levels or stop below today's low of 26,150. Look for targets of 27,170 to about 200 levels.
All right, Mitesh, I want to ask about LTTS. I'm not sure whether or not you're tracking that, but there's a big difference right now. It's a 200 rupee difference in the futures as well as the cash market. I think we should get a plate up for our viewers as well. We were trying to get that up earlier. Any clue what's going on here, Mitesh? Big difference. As just there was a difference, and as we speak, it's close to around 200 rupees.
I think it's just 230 rupees. And in fact, I was also shocked. But again, I have no idea why the futures are trading on such a big discount, which is roughly about 8% kind of a discount. But on the stock chart itself, I think there's a big price volume breakout which is taking place. In the month of March, the stock had multiple highs around, or closing highs around 37.60. So that is what I was looking at as the first target area. But once we clear that, good chance that the stock can go to about 3,900. Again, no idea why the futures are on such a big discount.
All right, and finally, before we come back to you again, Mitesh, I wanted your thoughts on HUL, because over the holiday that we had and today as well, we got strong updates coming in from the likes of Marico, GCPL in particular, where double-digit growth in both their home care and personal care businesses with expanding margins. Seems that the street has taken note of that for HUL, which has a larger chunk of their business coming in from home and personal care, and superimposing that bullishness on that stock. Because with this up move that we're seeing on HUL, it's crossed important levels and turned positive for the month as well as this year. Your thoughts?
So, Mangalam, this was one of the stock I was considering for giving a buy call just, now for the show. Good breakout, as you rightly highlighted. Breakout beyond the 200 average with a lot of, positive crossovers on the averages and indicator side. So, let's take 200 average as the short-term trading stop loss. So 25.53 is that level. So take 25.50 as the round number, maybe a rupee or point below that. That should be a stop loss. On the upside, I think 26.40 to about 26.70 is my first target area. but good chance that we might actually see this stock head towards 27.20 in the next few days. So strong uptrend from a trading point of view, that's a clear buy.
All right, thanks for that. Well, the city gas distribution companies like IGL and MGL have been trading higher as CNBC-TV18 learns from sources that the cabinet may now take up the gas pricing issue in the upcoming meet. Remember, earlier this week, the government kept APM gas prices unchanged at $8.57 per MMBTU. The new gas pricing regime will kick in if the Kirit Parikh recommendations are accepted. In fact, when we spoke to Kirit Parikh himself, he was quite sure that, the recommendations would be accepted at some point. Even Probal Sen, who we spoke to earlier in the day, had that conviction. Sonal is joining in with details of what the stock impact of all of this could be. Sonal, over to you.
Thank you so much for that. Well, yes, this time around the gas prices, they have been kept unchanged. They did say in their notification that till the time they are further revised, they will be kept at $8.57 per MMBTU. If we actually go by Kirit Parikh recommendations, which spoke about a range in which gas prices would be kept between $4 to $6.50 per MMBTU, where $4 would be the floor here and $6.50 per barrel per MMBTU would be the ceiling, which will be seeing an increase of $0.5 every year according to these recommendations. They also spoke about complete liberalization from 1st Jan 2027, and for difficult fields they expected liberalization to kick in by 1st Jan 2026. These are all for the older fields. Newer fields will continue to enjoy marketing freedom as well. There is an expectation that this could be improved with slight changes, but the big question is by when will they be actually approved? Because if approved, it would be a big positive for city gas distribution companies, which are the biggest consumers of domestic gas in the country. This would lead to lower gas costs for these companies by, say, $2 per MMBTU, and this would have an impact of 7.7 to 8 rupees per kg in terms of their input costs here. Of course, they can pass it on to customers, partially keep it, but in all, it will be beneficial both for their volumes and margins as well. 87% of their overall volumes come in from the domestic segment, CNG segment that is. So if approved, it will be a big positive. And we are, of course, our colleague is learning that this could be taken up in the next cabinet meet. So that is something we'll be tracking as well.
All right, the street likes what they hear, and the street believes that maybe this will eventually go through, which is why after a big decline on Monday, we are seeing strong recovery from lows on these stocks, the city gas distribution companies, all of them up anywhere between 2.5% to 4%, closer to 5% for names like IGL. Prakash Diwan joins us now on the show. Prakash, good afternoon. Thank you for joining in. Your thoughts on these city gas distribution companies before we talk about other things?
Good afternoon, Mangalam. So I think what seems likely is that this expectation of the price revision is also aligned with the government's intent to keep inflation in some sort of check, and we've seen a lot of the business losses to other fuels like propane and all, which in clusters like Morbi and all, where there has been a fair demand contraction given the hike in the prices earlier. So this will come as a benefit. Now, whether the CGD companies pass on a big chunk or a significant portion of that 7-8 rupees benefit is to be seen. But my sense is they'll at least be able to do at least 50% plus of that, which means it not only spurs volume increase, but it also kind of helps them retain some very decent margins, and that could probably be a reset in the way you look at and evaluate these companies. So let's wait for the confirmation, of course, but I'm saying that the positive likelihood seems to be much more, imminent than otherwise earlier.
Okay, all right. Prakash, please hang on for a bit. The call to buy India is getting louder. Global brokerages, well, they say it's time to get in. Sonia has gone across to the big wall to fill us in with more details on that front. Sonia?
Well, as you rightly pointed out, the chatter to buy Indian equities has gotten louder over the last few days. Indian equities have received 3 positive updates from brokerages who are advising clients to accumulate, as valuations have now reached a reasonable level post the recent correction that we've seen. Remember, the Nifty 50 index has corrected over 2,000 points from its all-time high of 18,888 on the 1st of December to a recent swing low of 16,828 on the 20th of March. Since then, brokerages, particularly foreign brokerage houses, have turned optimistic on the market, citing reasonable valuations. So let's start with Sunil Kaul, the India strategist of Goldman Sachs, who recommends buying India on dips, advising investors to buy quality as valuations are back to reasonable levels. The MSCI India Index is now trading at 19 times forward price to earnings compared to Goldman Sachs' fair value estimate of 18.5 times. Goldman Sachs has also retained their 12-month Nifty target of 20,000 and remains overweight on sectors like banking and cement. Let's move on to Venugopal Garre of Bernstein, who is expecting Indian equities to see a quick rebound in the near term after 6 months of an underperformance to other emerging markets. He further said that the call for a rebound is premised on a confluence of tactical factors, including valuations and a bunch of macro factors as well. Among sectors, he cites financials, real estate and cement to be the biggest beneficiaries of this potential rebound. Now, if you remember a few days ago on the 31st of March, brokerage firm Morgan Stanley upgraded India to an equal weight from the earlier rating of underweight due to a narrowing valuation premium and a resilient economy. The brokerage said that it is bullish on India's structural growth story and that growth will be driven by a confluence of factors: digital infrastructure empowered lending boom, demographics, domestic demand, as well as an improving foreign direct investment. Morgan Stanley intends to focus on the financials and the consumer discretionary sectors in India, and it has upgraded the consumer discretionary space to an overweight from an underweight earlier. It has also turned constructive on healthcare, upgrading the sector to an equal weight from an underweight earlier. Back to you.
Okay, all right. Sonia, thanks a lot for that. Well, Prakash, what do you make of the healthcare segment? The pharma index on the whole has been a big underperformer. But from the healthcare segment, is there anything you like?
So, Nigel, this is a sector that's probably gone through a fairly long time correction and a price correction, of course. But that the consolidation that you've seen within the sector, and it's a large sector. It's got not just a few good big companies, but then a whole tail of small caps, mid caps within the space. And my sense is the US FDA, the theme of US FDA inspections and the EIRs and the remediation, all of that cycle, if you understand, is probably turning favorable after a fairly long, arduous decade of sorts where pharma companies suffered globally in terms of competitive intensity and all. But there is pricing power coming back, especially to the larger players which have certain strengths in certain pockets, certain therapies, and you will probably start seeing some of the big names get into very powerful growth vectors certainly, and that's Dr. Reddy's, Cipla, to some extent even Sun Pharma. But it's time to look at the sector anew because there is very clear value available. If you look at the run up in some of these other sectors vis-a-vis the EPS growth, pharma actually offers the most promising PEG metric, which is growth that's expected next year. And from that perspective, the PE multiples are absolutely undemanding. So I think it's time to look at it, but it's a fairly long, as I said, fairly long list of names. Some of the names that I do like in the front line, bigger ones, is of course Cipla and Dr. Reddy's. As I said, you'd go with the safest, the biggest to begin with, and then you kind of start diversifying into smaller mid-cap names.
The other stock I wanted to ask you about, and we've been getting so many queries on this, is KPIT Technology. I understand that, of course, there was the JP Morgan report on KPIT where they initiated an underweight, and they spoke about how, the scarcity premium now of KPIT Tech is going to go away once the IPO of Tata Tech comes along. But for someone who's perhaps holding on to this stock as a long-term investor, has the time come to check out, or do you still keep the faith here?
Sonia, I think there's no reason why the KPIT growth juggernaut could kind of come to a halt just because there's another listed entity that's available. And I understand that scarcity premium bit, but the uniqueness of the KPIT model itself will continue to accord some sort of a premium. And this new arrangement that they have with Honda, I think it's a wonderful way to kind of move to the next level. So what they've done with the with the Volvos and the BMWs of the world in terms of getting informatics and telematics into their product suite, it's far more superior than what even otherwise players have done. And Tata will have to go out to the market to prove that it's much more, there's life beyond Tata Motors, right? I mean, there's been a huge dependence on the JLR and Tata Motors portfolio, whereas KPIT is cut across product lines, across geographies. And look at the SDM thing which they've done with the Honda. I think there's immense potential to scale that up with other players. So I don't see a reason why you should be worried about. The run-up has been fairly sharp, and that's probably one of the reasons why people find it rational to book some profits. But at lower levels, and if the EPS continues to grow the way it has, it definitely starts according a lot of value. But it's for the long term, as I said. It's not something which is a bounce that you'll see immediately.
All right. Prakash, just one more question I had on Nykaa. There was a largest trade that took place earlier today. I'm guessing that there was some supply that's got absorbed because that stock has been trending higher. all of today's session. It's still up close to around 8%. What's your view at around this 135, 140 rupee odd mark?
Yeah, so, sentimentally, the liquidity and the flows definitely tell you that the bottoming out could be near. It's like what Paytm went through when you had the SoftBank, overhang getting out and things like that. But it's not going to be so easy for them to justify very quickly, a reset in valuations, Nigel. I mean, you will have to, end of the day, the worrisome part has been profitability. And if that is still not something which has changed dramatically, I don't see any reason why people will want to kind of latch onto it. I mean, they're far better improving stories within new age businesses. And I don't see any reason why Nykaa would kind of start getting so attractive. Yeah, I mean, it's more of a technical factor. The price at which the deal has been done is probably not as bad as what was anticipated, if you really ask me. And that's one of the reasons why there's some support.
All right, Prakash, although in Nykaa's defense, it's the only new age company which is still profitable, even if we are seeing some compression in their margins. The important thing to watch out for them is how the company goes ahead and maintains its growth path, even as some of the senior executives of the company have made their exit. We'll watch out for their impact on the employee cost of the company as well. We take a short break, come back. We'll be back with our Alpha Manager, Shibani Sarkar Kurian. Welcome back. You're watching us here on Closing Bell. We have some updates coming in from Bank of Maharashtra at the bottom of your screen. But meanwhile, just keep an eye on a couple of these stocks. Bombay dying from the broader markets up around 7% moved to the high point of trade. Monte Carlo up around 6%. We're seeing decent gains in a couple of these, defense names as well. So Garden Reach is the one which has moved to the high point of trade alongside others which are buzzing around. You're watching us here on Closing Bell. Bharat Dynamics is the stock which is under pressure as its FY23 revenues have declined. Vivek joins in with more details. Vivek, in an otherwise good-looking mid-cap screen, this is a rare underperformer.
Well, absolutely right. So Bharat Dynamics has given its provisional FY23 turnover update. So FY23 revenues for the companies have come in at close to 2,458 crores, which is down almost 12.5% on a year-on-year basis. Now, the company has gone ahead and given some reasons as far as, why is this particular fall in revenue seen on a year-on-year basis. Number one, the company says as far as revenue booking was concerned, it was constrained by significant constraints in terms of receipt of imported electronic items and critical explosive materials from OEMs. Also said there were significant changes as far as designs were concerned in the production of naval products. The company also said that it faced a delay in receipt of medium-range surface-to-air missile that resulted in non-completion of production. However, the company has said that all of these worries that translated into lower revenue booking in FY23, they believe that it is expected to be recovered in the current financial year. So we'll watch out for, as and when these particular projects do get completed.
Okay, thanks a lot for that. Prakash Diwan is still with us. Prakash, this stock has had a phenomenal run, right? I mean, last year in Feb of 2022, the stock price was about 400 rupees and now it's almost touching 1,000. You think the story has played out in its entirety or is there more to go?
So, Sonia, if you recall at the time of the IPO, what was explained about the business, very few people kind of believed that the scale that they were talking about would happen, and it was ignored because we always look at 1 or 2 years down the line. And in fact, that's one of the reasons why post the IPO, the stock suffered. And in those couple of years, there's a lot of consolidation that happened. And now, actually, if you see the believers in this story and the entire defense space, are people who are looking at least about a 7, 8, 10 years kind of outlook. It's not something which will happen in a couple of quarters or a couple of years. This order book that they're talking about, there's nothing to do with March end being a reference point for them. It would continue to grow on a seamless basis, and that's precisely the opportunity that you get to buy into these stocks at lower levels. Lower levels, when I say, of course, valuations are right now rich because they've been certain love and discovery of these sector, but it'll give you opportunity, and you don't miss out on those opportunities. My understanding. The thing about Bharat Dynamics is the moment it starts executing orders for overseas clients beyond just the Indian Army and the Indian Navy, then you actually start seeing a very simple re-rating without any need to push revenue or margins or anything. So that is something which you need to wait, and that could probably be very soon, maybe in the next couple of years, within the next couple of years. And you have to watch for that trigger to happen.
Okay, all right. Prakash, I wanted to ask you about Orient Cement. We did an interaction with Mr. Deepak Khetrapal a couple of days ago, and it's been one of the big underperformers. Now it seems that supply overhang seems to be absorbed. Valuation-wise, it still trades around $43, $45 per ton. But if they can achieve what they've set out for the next few years, that is increasing capacity by more than 30%, improving their EBITDA per ton and ramping up volumes, what's your view on the stock at around 120 rupees? It's already gained close to on 10%, I think, in the last 10 days or so.
So, Nigel, apart from your magic touch, I think the simple, opportunity the market is looking out within this space, and everybody knows that this is a sector to look at. Sonia mentioned this in one of the, brokerage reports which have turned positive on India. The reason is very simple. If you're banking so much on infrastructure spend being the core theme for most of the revival that you see, and that's government-led, housing and construction of infrastructure is something which cement will definitely gain out of. And as we discussed the other day, the conditions are probably improving far better than what we thought and far sooner than what we thought. Smaller players which have struggled for other reasons because of balance sheet issues, if those things are resolved, most of these smaller players will be lapped up in a wave of M&A very soon, which could happen probably, start happening probably next year, but it will be very ferocious. So my sense is all of these smaller players like Deccan, Orient, Sagar is not so small, but all of them actually offer a great opportunity. And for Orient, if they end up doing what they've set out to do, I think you know that the valuations could get re-rated. The stock could probably be another 15, 20, 25% up in the next 12 months. So there's definitely ample room. This is just probably the beginning of that reset. But definitely, I think there's a very clear upside left. So if people haven't bought into it, somebody wants to buy tactically, yes, there's an opportunity. Somebody already owns it, would probably retain it for longer.
Okay, thanks for that. Well, Prakash, I also want your thoughts on some banking names, but for those of our viewers who missed out on the update, Federal Bank and RBL Bank are also under pressure today after the Q4 business updates that came through. Abhishek is here with the details. Abhishek, over to you.
Well, Sonia, as you mentioned, business momentum for Federal Bank is perhaps one of the best in last 14 or 17 quarters. So deposit growth of 17.4% YOY is perhaps the best in last 14 quarters, and sequentially it was around 6%. So advances growth of 20% plus on a YOY basis is the best in last 17 quarters. Sequential loan growth is about 3.8%. On the flip side, the credit deposit ratio has declined sequentially at 83.2% versus 84.9%, and even CASA ratio, that's at 11th quarter low of 32.7% when compared to 34.2% in the previous quarter, which could suggest that in a rising interest rate scenario, while your deposit momentum is strong, it could have pressure on the net interest margin due to the fact that loan growth is not matching the deposit momentum. RBL Bank, the CASA ratio is the highest ever. However, deposit momentum is weaker than the industry average. So deposits are up just 7.5% YOY and about 3.8% quarter-on-quarter. The CASA ratio, or the low-cost deposit ratio, is at all-time high of 37.4%. The CD ratio, or credit deposit ratio, that has improved both YOY and quarter-on-quarter, coming in at 84.7% when compared to 78.4% in the same quarter last year and about 83.6% in the previous quarter. Advances growth pretty solid at 16% YOY and about 5% quarter-on-quarter. But on the flip side, the liquidity coverage ratio, that's declined massively to 126% when compared to 144% in the previous quarter. Back to you.
Okay, thanks for that. Prakash, I know these are banks that you're not, Federal maybe, but RBL Bank is not something that you've liked in the past too much. But tell us a little bit about what you heard from Abhishek and what your advice would be to viewers.
No, so Federal is one of our picks because within that size, it's probably one of the best run banks. And you know what? This whole mismatch that we get worried about on the deposit ratio not keeping pace with the credit growth ratio. That's always going to happen. Banking is never an easy business, Sonia. And I think post the changes in the regime on the debt funds, on the tax regime, you'll see CASA deposits going phenomenally. So any bank which is able to get itself into doing the right stuff on the lending side is going to be actually the winner. So from that perspective, Federal has revamped itself so beautifully. I'm not so bullish on RBL Bank given its structure, which has still got some loose ends. But Federal is a tight ship. I don't see any reason why with this continuity in the management and the kind of expansion that they've done, that they can't grow, at a faster rate than the industry. So it's an opportunity. If the market's giving you that softness for some reason or some interpretation, be contrarian and buy into it. But banks, I think, have a very, very strong run still ahead of them. We've seen a pause, we've seen that come back, but I think it's still a long way.
All right, Prakash, thank you so much for joining in and giving us your views on a whole host of stocks. And we will come back to you on another day. Thank you for joining us today. With that, we will move on, and we have with us Shivani Sarkar-Kurian, who's a Senior Executive Vice President and Head Equity Research at Kotak Mahindra AMC. Shivani, thank you for joining in. We're seeing a decent move across the board, but it's the IT index which stands out in today's trading session. I remember the last time you joined us, you said that you are evaluating whether to enter the IT space or not. What has happened? It's a month which has elapsed since. Have you entered it? And if yes, is it the large caps, the mid caps, your views?
Yeah, hi, good afternoon. So since we last spoke, there has been significant developments at the macro front, especially where the US banking sector is concerned. And therefore, we believe that in the near term, the IT sector, especially on revenue growth front, would continue to see near-term headwinds. And as it is, Q4 is a quarter, which is a soft quarter on a seasonal basis. So when you look at on a vertical basis, and given the kind of commentary that we've seen from management, verticals such as BFSI, retail, high-tech, could weigh on the near term in terms of the revenue growth outlook. Now, structurally, we believe that the opportunity set that is there for Indian IT services remains intact, while near term there are challenges. And the growth that you had seen, which had accelerated during COVID, is now coming back to long-term averages, and this will be somewhere in the range of high single digits. So that's the kind of revenue growth assumption that we will have to clearly work with. Now, also in terms of deal mix, what we are seeing is that deal mix is changing, especially moving away from the short cycle discretionary spends, focusing more on cost efficiency. And also given the kind of macro developments that we have seen, it is possible that we will see vendor consolidation. Margins should gradually start to improve with lower attrition as well as wage cost pressures easing. And with this sort of a background, I think, the way we have been approaching the sector has been looking at valuations. And in that context, the large cap segment appears to be better placed. And as I also mentioned that if there is a situation of vendor consolidation, the larger players are clearly better placed than the mid cap in order to navigate these near-term challenges. So yes, valuations have definitely corrected quite sharply, but the mid cap segment is still trading at multiples which are higher than long-term average levels, which is why our preference is for large cap over mid cap.
Okay, your preference is for large caps over mid caps, but just to come back to IT, I didn't get, what your view is. Are you looking to buy IT now? Because as we head into Q4, one expectation is that large players like Infosys may perhaps, bring down their, or rather give a bleak FY24 guidance. And that may not bode very well with the stocks. Your thoughts? We'll be getting the numbers in a few days from now as well.
Yeah, so Sonia, we have been cautious on the IT space for a while. We incrementally will keep evaluating like we discussed last time. But in the interim, of course, new developments have taken place, which has resulted in some weakness coming through in terms of the revenue growth expectations for the sector. Also remember that while expectations have been cut in terms of earnings for the near term, overall, if you look at FY25 numbers pretty much have not been cut much where the sector is concerned. And therefore, management commentary is likely to be something that we will have to watch out for before taking a fresh view on the sector. So near term, we are approaching the sector slightly cautiously. And wherever there are corrections, especially where large cap IT is concerned, we would look at evaluating and adding some position. But near term, wait for management commentary before deciding on the fresh view on the sector.
All right, Shivani, but there's plenty of uncertainty in the globe, right? Would you rather stick to some domestic themes? In the past, you've mentioned there are various domestic themes that you would like. Do you hold on to that thought? And if yes, what are the themes you like at this juncture?
Yes, Nigel. So our view has been for a while that this is going to be a year where we will have to continue to contend with volatility. This is also going to be a year where likely between stocks and sectors, there is going to be a wide dispersion in terms of earnings outcomes. And therefore, one would have to look at companies on a stock specific basis, looking at earnings trajectory and valuations. In this sort of a framework, the domestic-facing companies appear to be better placed than companies which derive demand from global factors, and therefore that thought continues. In terms of sectors where we are positive on, so banks continue to remain one large space where we remain positive, especially the large private sector banks. Industrials, capital goods, and manufacturing is the second theme that we are playing in our portfolios. Third would be automobile as a sector, and incrementally even cement as a space is something where we believe that valuations are favorable and the outlook in terms of profitability is showing signs of improvement.
You said you like manufacturing. How close are we to a revival of the capex cycle? Just wanted to ask because after a very long time we're seeing L&T at the top of the table, up 4% as we speak. We have seen big moves in a lot of these earlier manufacturing names, some themes like defense, railway manufacturing and indigenization, etc. But just the large, broad capex cycle, how are you looking at that?
Yeah, so you're right that the private capex cycle is something that has eluded us for a long period of time, and we are all waiting for that capex cycle revival to take place. However, so far what we have seen is that the growth in terms of public sector capex continues to remain strong, and that is what is driving the order flows across companies. In terms of private sector capex, there are a few segments where we are seeing improvement in terms of capacity utilization. However, it's not been a big improvement where new orders have come through, where or large private sector capex announcements have taken place. The hope is that over the next year and a half, you will start to see some of that come through. At a headline level, capacity utilization across industries are back now to long-term averages, which should aid incremental capex, and also corporate balance sheets are far stronger than what they have been in the past. So therefore, we are still not seeing a huge revival where private sector capex is concerned. However, investments in sectors such as, for instance, as you correctly mentioned, defense, renewables, battery storage, all of these are also new areas where you're starting to see order flows, and that is leading to the the buoyancy that you're seeing where the entire industrial infrastructure space is concerned.
Okay, Shivani, we'll leave it at that. Thanks a lot for joining in, and thanks for giving us your thoughts on CNBC TV18. By the way, the market is still going strong, not giving up on any of its gains. The Nifty, in fact, could end at the high point of trade. Just look at that. In the last 10-15 minutes, there's a sudden bump up that the Nifty has seen. So we'll come back and get you a check on what dealing rooms are talking about in our segment D Street Chatter. We'll also get you some buy today, sell tomorrow calls from our technical experts.
Welcome back. Well, things looking good for the markets. We're up close to around 160 points as we speak, but it's that time of the day then where we get Nimish in to tell us what he's picking up in terms of D Street Chatter. Nimish, what's going on today?
Hi Nigel, strong day for the bulls. The fact that we are at the day's high and led by large cap names as well. So the HDFC twins are helping the bulls. ITC, L&T, all the large cap names are supporting the market, and that's a good sign. In terms of flows, again a mixed day, but I guess today's rally is also because of short covering. Remember, 17,500 was a very crucial level from a technical point of view, given the position in the futures market, and it looks like because of we trading above 17,500 now, there is a sign of short covering as well in many of the stocks in today's trade. So that's the overall feedback. I guess while the financials broadly, barring HDFC twins, the financial stocks are under pressure today, despite strong quarterly updates from most of the financial names. I guess that's largely to do with the RBI policy tomorrow. I guess 25 basis point is priced in, but there is a chatter as well of maybe there could be a surprise pause as well. So RBI policy tomorrow will be very important from a banking Nifty point of view. So that's something to track in tomorrow's trade. As I said, the initial quarterly update was quite strong for the financial names, but I guess that rub-off is largely in the technology stocks today. So most of the technology stocks are buzzing in trade, a bit of short covering as well in many of those names. But I guess next week the IT earnings also will be very important for a directional trade in the technology stocks. So that's something to track. But I guess from a positioning point of view, 17,500 on the Nifty is very important level to breach, and the RBI policy tomorrow will be very crucial for the bank Nifty.
All right, Nimish, thanks a lot for that. The macros that you've spoken about with regards to the dealing room, the sectors the dealers are betting on, but individual stocks, let's drill it down to that.
Hi Mangalam. So in terms of individual names, the first stock on my list today is Unichem Labs. Big move in that stock, up 16% last when I checked, and on good volumes as well. And now the street is anticipating some corporate development in Unichem Labs very soon, and hence that stock is buzzing in trade today. So that's the first one. The second stock is United Spirits. Well, it's recovered from the intraday lows, but again there is selling pressure at leading FI desk in United Spirits. And coincidentally today there was a report as well from Citi, and they've opened a negative catalyst watch on the stock. and they're expecting the margins to be under pressure, and the margin recovery will take further time. So that's the reason why in the initial period, United Spirits was under pressure in today's trade. The third stock is HCL Tech. Even in HCL Tech, while the stock is recovered from intraday lows, JP Morgan today has put out a note, and they've opened a negative catalyst watch ahead of the earnings season, and they expect some bit of disappointments in the quarter 4 and FY24. Overall, just visibility as well. So maybe that's the reason why that stock needs to be watched very closely in run up to the earnings within IT. So that's HCL Tech. And the last stock is Poonawalla Finance. Again, that stock marginally under pressure today, but the volumes are good and there is buying traction as well. And I guess while the quarterly update was quite strong, Street is expecting the final clearance for sale of the housing finance business very soon. Remember, they sold the business to TPG for 3,900 crores, so that money will come in. I guess that's a big trigger to watch in Poonawalla Finance going forward.
Okay, thanks a lot for that. Well, Nifty is holding above the 17,550 mark with quite a bit of ease right now and could close above the 200-day moving average. So some interesting levels are being crossed on the upside. Mitesh Thakkar joins in to tell you what to buy or sell today for a reverse trade tomorrow. Mitesh, what's on your list? A lot of large caps moving up today. L&T, the HDFC Twins, ITC, HUL. Anything that you like from there?
So we had buys on L&T and other names. I think I have HUL as a BTST call right now. HUL, I think, very clearly we discussed that in Mangalam as well. Big price volume action. So take a BTST with a stop just below 25.70 for targets of 26.10. And the other one is Sun Pharma. That's also, stock again from the large cap category, making a fresh swing high. So BTST here with the stop at 990 for targets of 1,010.
Would you do anything with Grasim? You liked Ultratech, you liked Shree Cement. Grasim, would that be on your list as well? Because that's the one picking some gains as well as we speak.
Yes, Mangala, a very good breakout happening here. I think, if you look at the stock price in February, it made two closing highs at about levels of 1645. Then in March, on 27th of March, we got a high of 1648. Again, 1641 on 31st of March. So there's a multiple pivot over there which has been crossed today. So very, very strong chart pattern from a trading point of view here. Keep a stop below 1635. Look for targets in excess of 1720.
All right, Mitesh. Thank you for joining in and giving us those buy today, sell tomorrow or reverse trade tomorrow sort of pick. Let's talk about the biggest gainer on the index right now, L&T. That's the one in focus, along with NBCC as well on the back of a bunch of new order wins coming in for both these counters. Vivek joins in with the details of that one. Vivek.
Well, that's right. It's order cheer as far as L&T is concerned. Some large order wins coming in. In fact, the company categorized this particular order as a mega order win. So what's actually happened is that the company has received an order of over 7,000 crore in its hydrocarbon business. And this particular order has come in for multiple offshore packages from one of its largest clients as far as the Middle East market is concerned. Now, remember, the hydrocarbon business for L&T is under the L&T Energy Hydrocarbon. So FY24 starts out on a very strong note in the hydrocarbon business as far as L&T is concerned. Now, coming to NBCC, it's again order cheer here as well. Got an order almost of over 450 crore, and this particular order is from the Ministry of Home Affairs. It's for a road construction project. The company will act as a PMC, and this is in the state of Mizoram in India.
Okay, all right. Thanks a lot for that, Vivek. Well, Mayuresh Joshi joins us as well to give us his view on a whole host of stocks. Hi, Mayuresh. Good afternoon. NBCC, what's the view out there? Last few days it's been doing quite well. A few years ago, they promised, but they didn't deliver. This time around, do you think they will?
Yeah. Afternoon, Nigel. So I think two aspects. One, I think the order book has always been robust for NBCC. So I think to that extent, when you talk about revenue visibility, as far as the order book is concerned, it does provide a very, very reasonable amount of comfort on that level. The second element in terms of execution, I think that is where I think the street is a little bit apprehensive because over the past few quarters, execution has been below par, and therefore the kind of margins that this company posts. Anyway, it's a low margin business in terms of both the PMC and the other business that they operate out of. So I think the low margin business with execution probably just getting delayed adds on to working capital woes, and that probably drags down return ratios as well. So yes, I think order wins probably a sentimental impact onto the stock, whether they'll be able to execute it or not. I think still remains the paramount question. Out of the broader markets, we just leave one alphabet out. I think NCC is something that we like. Our own take is that a very strong order book and revenue visibility, expectations of good margins, and management very, very hopeful in terms of execution on the top line as well as bottom.
Yeah, I think NCC has been strong as well. Even through this market volatility, NCC has been holding up. Mayuresh, I wanted to ask you about Vedanta Limited as well. There's a dividend that comes up and the record date is on the 7th. So it'll go ex tomorrow. So effectively today is the last date to buy it if you want to get that dividend of 20 rupees 50 paise. What's your view on the stock? The stock is moving to the high point of the day. Business-wise, it looks pretty okay. The only problem is you're unsure what the promoter entity will do next. Your view?
Oh, absolutely, I think. And that is where I think a lot of participants on the street have their doubts on, Nigel. What probably happens on the global parent in terms of capital raise is going to be extremely critical as far as Vedanta is concerned. All these factors, I did go through your piece, well put out by you, Nigel, and I think it's very well laid out in terms of the actionable that one wants for a quick trade. However, I think from a fundamental perspective, what the parent really does, the bond prices have probably come off at this juncture when you talk about how Vedanta bond prices are trading on global bourses. And therefore, in this commodity cycle, which is expected to be muted for a better part of this financial year, earnings might also stay muted, which probably means that return ratios might get impacted. Again, I think a large part of the dividend from Inzing has been accounted for. So I think a repetition of that dividend looks very unlikely in the next fiscal.
Okay, Mayuresh, hi, good afternoon. From the basket of stocks that you like, perhaps, what looks like a good buy right now? If this market is maybe trending higher and looks like on a valuation parameter, the market has reached a bottom, then what are the 2 or 3 stocks that one should be looking at now?
Sure. Afternoon, Sonia. I think out of the broader markets on our buy watch list, we've got 2 or 3 names. One obviously is data patterns. We've obviously been speaking about BDL, VEL, but the kind of order book that data patterns has in excess of 800 odd crores, I think it gives solid revenue visibility going forward. The second element in terms of margin performance itself, gross margins expected to remain in that 67-70% kind of a bad. EBITDA margins 33-35 odd percent. They've done a revenue CAGR of almost 34-35 odd percent consistently over the past few quarters, and ROEs stay about 23%. So most parameters that we look on the OD lens, Sonia, absolutely get covered by data patterns. So this is one stock that we keep on our buy watch list. The second stock from the infrastructure space is VATech Wabag. Obviously, it's a little bit conditional because it needs to cross that key pivot levels on the OD lens at 375. But a large element in terms of a stable order book, more than 14,000 crores, 11% in terms of standalone margin, console margins at 10 odd percent, showing improvement, working capital days coming down to 90, and expectations in terms of further improvement going forward. I think this is one stock that can be on your radar. The third one can be CCL Products. Management given solid commentary in terms of volume growth, 20-25% expected in the coming fiscal, expecting 20-21% in terms of margin profile going forward. The B2C business, especially continental coffee, expected to grow exponentially going forward, and its Vietnam operations will aid volume growth going forward. So a few of the names that should be on your buy watch list.
Right, Mayuresh, finally, before we let you go and take a short break, just wanted your thoughts on Godrej Consumer. That stock's moved to the high point of trade. Sometime during midday, it came out with its 4th quarter update, not looking particularly bad. In fact, it's a good update coming in on all fronts, the India business, the Indonesia business, also margins improving for them. Your thoughts on this stock?
Good update, Mangalam. And again, I think a double-digit volume and value growth in personal care and home products as well. 2 things, I think we just released a report yesterday in terms of leaders and laggards. FMCG is standing out to be one of the leading sectors at this juncture. Above all moving averages, and most stocks are probably doing the right stuff that is expected. Inflation in terms of input costs or the input cost inflation expected to remain very benign going forward for most of these players. And therefore, I think the expected performance in terms of reasonable volume growth, led price recovery, should probably abet earnings growth. I think the only risk element out here is the El Nino, Mangalam. I think if that probably plays out, you might have a tough first half for these players. And then I think the entire recovery probably gets pushed to the second half. But as a sector, I think one of the leading sectors on the only lens.
Okay, well, thanks a lot for that. We will do one thing. We will take a quick break. Thanks, Mayuresh, for joining us. More market talk coming up on the other side, and we will be heading into what has been a really strong close for the market, a very good day as well for the bulls. More on that coming up in a bit. All right, we're winding down what has been a really good day of trade. I mean, no two ways about that. The Nifty will close with gains of 170 points almost. We haven't given up any of our gains through the day, and it is the high point of trade. A lot of gainers from the large caps, L&T, HDFC Twins, ITC, HUL, all ending in the green. Tomorrow is a big day. We have the RBI policy and more than the 25 basis points rate hike, I think, which is a consensus. It would be interesting to see what the stance of the RBI is with respect to growth, given that we have added concerns of a banking crisis globally and what they say on inflation as well. We spoke to the economist at Morgan Stanley, Chetan Iyer, regarding his expectation from the RBI policy and what he expects on the current account deficit. Listen in and we'll come back and wrap up trade.
RBI may not want to give it a clear signal that they are done. Most central banks around the world, RBA, Reserve Bank of Australia, yesterday also did the same. They paused, but they said that there would be a possibility that they would do more rate hikes. So I think it would be probably unlikely that the RBI gives a clear signal that this is the rate hike, this is the last rate hike. But look, in our forecast, we do think that this is the last rate hike. We think India can actually grow at 6.5%, but this weaker external demand will take some sheen off. And that's why we think growth rates will be closer to around 6.2. Look, I mean, if there is a deeper slowdown in the US because of this tightening of lending standards, you could shave off some more of India's growth. But broadly, the India story is really the best in the region, and also, in fact, I would say amongst the large countries in the world. I think that the services exports have been doing extremely well, and they have surprised on the upside, and the market share for India has now gone up to about 4.7%. So we think that, services sector is really the most important driver of current account at this point of time. And at the same time, we have also seen some upside surprises in the remittances inflows. So together, that's helped to keep India's current account balance in a reasonable shape. We're expecting it to be 1.9% in 12 months ended March 2023.
Well, it's time to start winding down then. It was a good session, actually. You've conquered important marks, the 17,500, 17,550 odds. The markets are going into the RBI event expecting 25 basis points and maybe, in fact, expecting dovish commentary as well to come through. So that's the reason why, the markets ended higher. The Nifty Bank that ends higher with a gain of around 0.5% or thereabouts. So the Nifty ended higher. That told you that, in fact, some of those large cap names did very, very well. L&T on the back of the big order win in the hydrocarbon business, stock is up close to around 4%. HDFC up close to around 3%. Giving a company on the upside was the other twin, HDFC Bank. ITC as well accounts for a large weightage on the index. Well, that as well was up close to around 2%. And HUL as well went home with good gains in trade today. What didn't do too well? Well, one of those big outperformers in the last 1 year, Mahindra & Mahindra pulled back a little bit, was down close to around 1.5%. Eicher Motors as well was under some pressure, and IndusInd Bank as well ended with a cut of close to around 1%. But Mangalam, the mid-cap index, that ended more or less flattish, but plenty of stocks gained from the broader markets. The small-cap index, in fact, was up 0.4%.
It was a great day of trade, Nigel. Any way you cut it. The mid-cap index, while it was flat, it could perhaps be on account of the weekly options expiry, because we had 3 stocks advancing for every stock which was declining today. The mid-cap IT stocks, that took your breath away. Big gains coming in for LTTS, LTI, as well as Coforge. And then we had the city gas distribution companies as well doing extremely well, the likes of IGL and Mahanagar Gas. Order wins coming in for NBCC as well. That stock ended about 3.5% higher. What did not do too well in the mid-cap end of things, we had Ashok Leyland, some worries about CV growth going forward. That stock lower by about 4%. AB Fashion and Retail also ended about 4% lower. Most of the cuts came by in the last hour of trade. And Federal Bank, despite a decentish update, the stock ended about 3.5% lower. But way more gainers than losers today. And that's how we wrap trade. In fact, on that note, we wrap up this edition of Closing Bell as well. Don't go anywhere, however. The focus on markets continues on the other side.
Brought to you by Big